Hello, traders. In this edition of your weekend video newsletter, we'll discuss last week's rally and subsequent profit taking on Friday. In addition, with breadth subsiding and earnings season kicking off with the banks on Friday, we'll review the sector rotation into healthcare and staples for setups this week. There you go. Last week, we saw the indices rally with IWM and the NASDAQ leading. In addition to banks starting the earnings season, tech stocks moved higher for the most part, with the exception of Apple, which was flat on the week. Sectors did start seeing some consolidation on Friday, with healthcare, real estate, and consumer staples seeing the majority of the buying to finish the session. International markets also improved, especially in Europe and Southeast Asia. We'll look at some IBD 50 stocks that are set up and stocks showing relative strength. The ones with asterisks are the best setups, with the caveat that we're anticipating a bit more consolidation as earnings season gets fully underway. The S&P 500 continues its outperformance relative to commodities. When these cycles turn higher, the red arrows, that usually leads to a 4 to 5 year rally. In the case of 2009, it is the current secular bull market with intermittent cyclical bull and bear markets therein. Over the years, this particular ratio has been very valuable in catching the start to new trends, with no reason to believe this won't repeat again. The caveat, of course, is extended rallies do tend to consolidate, so we're watching for the S&P 500 to pull back a bit. We're up nearly 30% off the October low, with our favorite T. Rowe Price Blue Chip Growth Fund up 43% from the October low, showing no signs of consolidation just yet. I would expect this to start consolidating like the rest of the markets in the short term, with the New York FANG Index and the top tech stocks reversing on Friday and giving us what looks like a shooting star. Expect more consolidation as earnings season kicks off. Stochastics and MACD are turned, so there is a possibility that we could see some strength too. So that's why it's so important to wait for Monday to get an idea of what the markets have in store for us, and then trade accordingly. We'll let you know via the live broadcast and the alerts channel what we're looking at on Monday morning. The NASDAQ Qs did see a similar shooting star or gravestone doji on Friday. We're anticipating that we could see some consolidation, but we do have RSI showing strength of trend into earnings season. MACD has turned, with Apple consolidating, closing flat for the week. Also, we have to keep in mind that the NASDAQ and Russell were both up more than 3.5% last week, which could be pointing to rotation into small caps and a continuation in the strength that we saw in the builders last week, which closed at 52-week highs. All of the builders rallied, as we can see in the group's performance for the week, with HOV up nearly 20%, MHO 14%, KB Homes 13%, and so on. DR Horton was up nearly 13% on the week. We also saw healthcare stocks rally, with Intuitive Surgical up 6.8% for the week, with healthcare stocks rotating in, while some others like energy saw some profit taking. We also talked quite a bit about breadth, about the S&P 500 hitting 45.50, 45.25 resistance levels and being rejected. We didn't anticipate that we'd follow through. We were a bit extended. We rallied Tuesday, Wednesday, Thursday. Friday, we took a little profits off, and breadth did subside a bit. So going into earnings, we would anticipate that caution is the best strategy in the short term. NIMO giving us the same picture, looking at the black line. We are rising, and extended. Growth and value once again extended, but we're making these higher highs and higher lows. The last time we talked about this 3 weeks ago, we were looking at OPEX and how price action would most likely see a window of weakness. This week we have Wednesday VIX expiration and we have monthly OPEX for July. I wouldn't be surprised to see this fade a little bit. That said, we will be watching early on Monday to see if there's any kind of follow through, since momentum was clearly bullish, with the caveat that we have earnings season starting in earnest. Finally, we have to consider the number of stocks trading above their 50-day in the upper red and green panel, the number of stocks trading above their 200-day in the lower red and green panel are near extremes. This is subjective. I put the red and the green on here just for the obvious correlation to overbought and oversold. When we get to these overbought levels, we want to be more cautious, watch our profits, and look for defensive sectors to catch a bid. Keep an eye on gold, silver, and copper as well. Gold and silver are both moving higher and bullish. It could be positioning for safety when both of these rally together. While copper rallying is an indication that the economy is improving, together with the highest reading in Michigan consumer sentiment in over a year, printing 72.6 on Friday. That's an indication that we could see some follow through, while at the same time looking for bears to capitulate more. Consumer sentiment looking good, the economy improving. The rate of change here is showing that bears are capitulating more aggressively. This line is almost straight up without the jagged back and fill that we've seen in the past. 2009, people were still unsure after a 60% drawdown that the markets are starting to reverse. In this case, the bear is capitulating pretty quickly as the dire consequences that many were looking for to start 2023 never materialized, and the Fed seemingly having the effect they were looking for by raising rates aggressively in 2022, while they're starting to slow down as we proceed into the second half. As previously mentioned, we're looking for healthcare stocks, builders, consumer discretionary to see some flow and rotation. We have Europe showing improving conditions. We're looking for these stocks down below, especially the ones with asterisks to potentially follow through. They have the best setups. While these 4 stocks in red are from the New America in IBD, just some things that I was looking at over the weekend. JFrog in particular looks pretty good. That said, let's take a look at the IBD 50. Aon looks pretty good. Stochastic still rising, showing strength of trend, looking for a breakout above 100. The caveat with most of these is that we are a bit extended as we start earnings season, so I'd be looking for the best setups with stochastics turning from below, like we have with ACLS and Amphastar Pharmaceuticals, which is from the healthcare sector, which saw some rotation on Friday. Travel and leisure stocks that had very strong action over the last few weeks. Carnival, Norwegian Cruise Lines, and Royal Caribbean all faded last week. So we're looking for another setup and a base to form before getting back into those or starting new positions. Celsius looking pretty good. Volume picked up on Friday. Stochastics rising. Looking for a breakout above 155. Copa Holdings showing a failed breakout on Friday, but the momentum is clear. Stochastics rising, looking for a follow through, maybe a reversal and a push towards 120. Some of the retailers like Crocs had a nice rally. Susie was trading this one early in the week, looking for a little consolidation, maybe a pullback to breakout around 120. Let stochastics get oversold a little bit and turn back up. At the same time, retail pulled back Wednesday, Thursday, Friday, looking for consolidation and resuming the trend. 921 50-day are turned up and to the right, watching for the 50-day to cross up this week. Another medical stock, Inspire, stochastics rising, showing strength of trend, trying to break out above 325, along with MedPace. And other stocks in the group, we have a stock that's kind of boring. UFPT. They make medical products. Nice little reversal here in UFPT with earnings growing into 2024. Also watching Transmedics, which is following through on a breakout. Stochastics embedded. We have volume increasing all of last week. We also saw a lot of stocks showing relative strength pointed out in the IBD relative strength scan. All of these following through on above average volume. Air Systems, note the breakout of this base at highs, could be called a cup and handle. Volume was well above average. MACD and stochastics rising. This one looks pretty good. Appfolio also. Note these are all trending, 921.50 or above the 200-day. All four moving averages are up and to the right. Volume look pretty good. It's a low float. I love to see these above 200,000 or 300,000 shares to consider a position. Arcturus Therapeutics breaking out, looking for a follow-through. Above average volume, MACD stochastics rising. Ares Management in the real estate and financial industries breaking out last week. Boise Cascade and the Wood Products Group blasting higher back in June and continues higher as the builders show strength. Builders First Source playing on the strength in the builders and construction group. Trending 921.50 day and 200-day are all rising up and to the right. Relative strength has been above the 50 level since the beginning of the year 2023 and continues to stay strong, showing strength of trend. 921.50, 200-day are all up and to the right. Something you should look for when looking for swing trades, especially into the start of earnings season. Century Communities, a builder of starter homes, first new home buyers, etc. D.R. Horton rising rapidly last week on the breakout. I wouldn't chase this up here. Let's see if this can continue. I'm pointing these builders out only because I would look at these as momentum trades. If we get a pop on Monday, we might have a follow-through trade. Intuitive Surgical, another medical name, following through and showing relative strength. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday, the 16th of July. I'll send out a watch list later tonight around midnight on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, have a great weekend. Take care, and we'll see you on Monday.